Gold just hit a 6-month high, and there are 2 under the radar stocks that are bound to explode. But here's the secret. You only have about 2 to 3 days to act so that you can profit from this move before everybody else catches on. Any later than this, the stock is likely to be overextended and it is not going to have a good risk to reward ratio. Of course, I spend every week looking through the stock market, looking through commodities, trying to find the best investment opportunities for you. This channel is for swing traders looking to hold stocks from a few weeks to months, and we help you with that. So in the next few minutes, I'm going to show you what is really happening in gold. I know nobody talks about gold, but the fact is that gold has been moving to all-time highs, and we cannot ignore this opportunity to put money in our pockets. I'll show you 2 ETFs that you can use to profit from this gold move. And I'll also show you 2 gold stocks that you can use to pad your portfolio with a 20% gain, most likely within the next month. Now, of course, in everything in trading, everything is a risk. But with a lot of technical analysis knowledge and experience, I've seen these things happening over and over again. That's why I bring them to you so that you can make money for yourself. Now, the first thing that we shall do is analyze the gold chart. Whenever you want to analyze a market, you have to look at the long-term view and the short-term view. So, of course, we have a 4-day chart. Each bar here represents 4 days. It's like a weekly chart. I like to use a ratio of 1 to 4. Each side here, on this side, this is a daily chart. So many months ago, I released a video around here saying that, hey, please buy gold. This was earlier in March this year. People really ignored. And the reason I was saying this is because gold has broken to all-time highs, right? So you see gold here broke to all-time highs when you look at this weekly chart. We cannot ignore this. When something breaks into all-time highs, that means people are bidding higher. They're willing to pay a higher price to attain this, right? Gold cannot be bought outright in itself. You can only buy gold contracts or gold ETFs. I'm going to show you how to do that later. So from around 2020, for 4 years, gold has been creating a base. It has been going nowhere. And after 4 years, it has finally broken out. We saw this happen in the past as well. It did this for so many years, and then gold went up about 50%. Of course, I made another alert around here in September again. I'm like, hey, please get into gold. We saw a base here, cup and handle. This is how it happens. You have your cup and handle. You see this contraction pattern. Whenever you see contraction patterns like this is a chance for you to load up on the commodity or the stock. And whenever you see a bar that is around the 20-day or 50-day moving average that closes above the high of the previous candle, we can see it here. You have to zoom in on such things now. This bar closes above this high. It's a good time to load up on some stocks. This is called an inside day. This is also a good time to like buy a little bit of a stock. And then here is where it breaks out. So here, all hell breaks loose and it jumps out. And after it jumps out, what can we expect after a base? The first time the stock returns to the 20-day moving average, we can expect it to bounce from there. And of course, we want to see a consolidation. On the weekly chart, it's taking about 3 to 4 bars. So here we can see 3 to 4 bars. And the good thing is that these 3 to 4 bars are going sideways. They're not going down. So this is a very strong signal. So after you see that in the gold stock, the next thing to do is to find an ETF, because you cannot buy gold outright on its own. You can either buy futures contracts or you can buy ETFs. Of course, most people don't do futures. So here we focus on ETFs. And the first ETF is called UGL, Ultra Pro Shares Gold. So this ETF moves about, I think, twice the movement of gold, because gold is very slow. It moves about, I think, 1% per day, but this one will do twice of that. So here we saw earlier in the year, there was a 34% return. And of course, since gold is not as volatile, they're willing to put in much more money. So here I released a video earlier this month and I'm like, hey, please guys, get in here. You can check the channel for this video. You could have already made your 13% gain here. And here we can see the same signal that I told you. Wait for a consolidation that takes at least 4 weeks. You know, you want to see 3 to 4 bars. The longer, the better. Sometimes it can take months. As we saw here, you see it bounces off the 20-day moving average. We see a day that closes above the previous close. So you see this pattern here. This green kind of closed above the high of the previous day. And then we can enter here. I'm already in this trade again. And we're just looking to see how we can take our profits. So the way to trade this is you get the 1.5 average true range, a value that I just automatically calculate here, which I know is about 3%. Put it in there at 2.86. So the first place to do is I normally take off a third of my profits when it moves 2R in my favor. So here is something you can see when I put 2R, 2 to 2.5 hour, I will probably remove a third of the position, right? So now I reduce risk and then I let the rest ride. So I realized that ETFs don't normally move as much as stocks, commodities. So the maximum you can represent it like about 4 hours. So here you can see when gold jumped out here, it did about 3.6. The maximum it did a 3.8 hour. So here we are looking to see the same for that. The ETF is SHNY. Now SHNY is very similar to UGL. They both track gold, but this is a 3 times leveraged ETF. So that means for every percentage of gold that moves, this one will move 3%. So that's how we can see we can get better returns. So that's why I like SHNY. It acts more like a stock because now this is around the 1.5 average churn that a stock would normally have. So this is something which you can just have like 10% of your account. So here we see it already did about 20% move. So you could have profited from that. I released a video on my channel and now I'm releasing another video. Get in again. Here is a good time to get in. You know, to put your stop loss is 1.5 of the average true range. So we see the average true range is about $1.94 or 4.2%. Put in there, that's our stop, right? This is of course very wide, so normally I'll just put it maybe here. I don't want it to close this gap, so I'll put it right under the 20-day moving average, which is that light blue line. I like to keep the moving averages very light so that they don't distract me seeing the long-term view. The white line is a 50-day moving average. So that is our stop right there. And then, like I told you, when it moves 2 hour to 2.5 hour in our favor, we take off half of the position. So here it moved 4 hour last time. So that was a good profit. We take out half of our position because as technical analysts, if it moves in our favor, we take some money off of the table because we don't know if it's going to collapse or not. We are playing on probabilities. Take some money off a 2 hour or 2.5 hour. I like to do it around 2.5. You can ride the rest until it closes under the 10-day moving average, or you can sell it around again 4 hours. So now those are the 2 ETFs. Onto the stocks. One of the stocks that I really like, I actually already started a big position in, is called KGC. I like to look for inside days around the 50-day moving average. It closed above the high around the 50-day moving average or 20-day moving average. So I added around here. So this is why I took my first position. Then once it came and did another 4-week consolidation, I told you just count 4 bars on the weekly chart. 1, 2, 3, 4. Comes back around here, closes above the high. This was a good time to get into here, but then it collapsed. So you'd have been stopped out of that first position. Then you would get in again around here. So here you get in again once it closed above the high of the previous day, and then the next day it crosses above that price. So I got in again around 9.45. I don't think it's too late to enter this stock. It's kind of a little bit more extended now, but you can still profit from this. What you can do is, we know it's likely to move 3 hours. So you just come from where it's supposed to move from, put in 4.4%. Let's see. So here you put in 0.4%. Okay. It's likely to move around 12%. So now we know that this is kind of like our target area, minimum movement. And then you can come and, see how you can enter here, put your stop loss there, and maybe you can go in for a 2 hour profit. So this is not the best stock. There are other stocks which are still really good and ready to be bought. The next one is NGD. NGD is really beautiful. And I like this play. This is something called a 50 moving average bounce. Now, stocks normally bounce around their 50-day moving averages. As you can see, whenever the stock comes, it bounces off the 50-day moving average. Bounces off the 50-day moving average. Does it here the third time, and of course, it's doing it here again. So I told you what formula to look for. Look for a close that closes above the high of the previous candle. We can see it kind of happened here. This is something which looks like an engulfing pattern, but also a good time to enter. It's not as strong as the one we see here, where we have a close above the high of the previous day. This is the best possible entry. We can see what happens whenever those entries come. You see, it moves up. Here, it did it. It jumped up. It did it on this bar, but this was very overextended. If the stock is very far away from this 20-day moving average, it's probably not safe to get in unless it's a breakout move. But for a 50 moving average bounce, a 20 moving average bounce, you want to wait for it to be close to the 50-day moving average. So here it did it, but then it didn't go above the high. So we didn't get in the next day. But then after a few days later, it did it again. And then immediately the next day it went up. And then that was a very good quick profit. I actually profited from this move. I remember I sold it around 20%. I didn't catch the whole 25% move, but I really enjoyed those profits. So this is a very good stock. As I've shown you what you can do, I've showed you where the stop can be around $2.68, right? These are the profit projections. The first time it reaches 2.5 hour, so you can take a little bit of profit off. The reason why we want to sell here is because it's, it's reaching the high, the previous high. Stocks normally fall at such levels, and then we can look to take off another one around when it reaches 4 hour, right? Or if you don't want to sell the other half at 4 hour, then you can just wait for it to close under the 20-day moving average. And lastly, the last gold stock that is really good for you is AGI. Okay, so this one is doing the same thing like I told you. You want to find a 50-day moving average that is sloping up. So we can see it has done this historically. Here it bounced off the 50-day moving average, it went up, right? And whenever it's bouncing off, you want to see that it has been consolidating for at least 4 weeks. So you just count 4 bars here, right? 3 bars is trustworthy, but when it's 2 bars, never enter the thing. You want at least 4 bars minimum. 3 bars, sometimes it can work. Like here, when it bounced to here, it actually had 3 bars, 1, 2, 3. And then we can see our signal that I told you about. So now this is another tricky signal. This is something called an inside day. Whenever you see an inside day like this, and then the stock comes and passes above this high, you could have just bought it here. Or if you wanted to wait for it close above the previous day high, then you'd have bought it here, but still you enjoyed a 14% profit, and the risk was about just 3%. So that was a very good entry here. The profit here you could see, because your risk here, you'd have made about 4 times your money back. So if you risk $100, you're going to make $400. Very easy on this play. It's taking you about a week. Anybody can do this. We see the same thing happening here again. Close above the high, does that again. You can still enter here. This stock is not far away from the moving average. I kind of like it. To measure where it's going to go, we put in 3.84, which is 1.5, the average true range. I told you it normally will move about 3 to 4. So we can maybe just count 3 first. This is a very slow moving stock, so we don't expect too much from it. So this is where it's likely to stop. This is the first target, right? And I told you when it reaches about 2 hour, I normally take a third of my position off, because I don't know if it can, really reach those high levels that I put for it. So we can see that this 1.5 average true range would be a very wide stop. So what I would do is just tighten it up. So instead of making maybe 2 times our money, we would make 2.5 times our money here. And if it was to reach here, we'd make almost 4 times our money. So those are the bold stocks. If you like this content, please like this video so that it can spread out to other investors, and also subscribe to the channel for more videos like this. May the markets be with you.